Welcome back to the Market Matrix, and today we're going to take a dive into the broadening top. We're going to speak about what it consists of, as usual, how it goes, what's going on with it, and the regular stuff we talk about the rest of the patterns. So this pattern is going to look a little funny, in my opinion at least. We had the double bottom where it was a smooth pattern, it was just repetitive, bottom, 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 something like that. It was smooth. We had the head and shoulders, which was something like this. It's a smooth pattern, We had the pennant, where it was something like this. It's smooth. We had the cup and handle, smooth. Now we have this pattern that just looks straight up ugly. Here's how it happens, and you can give me your opinion on what you think. The stock runs up, and then it starts breaking into new highs and pulling back, breaking into new highs and pulling back. Broadening top is now formed, and if you look, what's going on is it's breaking into new highs, and at the same time keeping up with these higher lows as well. So again, what is it doing? It's forming new highs, at the same time forming higher lows. If you remember when we spoke about the bullish pennant, it was making lower highs while making higher lows, which gave it that triangle look. It's a nice look it had, the triangle look. This one's going to be looking a little sloppy, and sometimes I even see this and I say, hey, what's going on? Until I realize, wait, it's a broadening top. So remember, higher highs, higher lows, coming after an up move over here. So the look it gives is, imagine there's a crowd of people and somebody's trying to speak to them all, so they need to raise their phone. What do? They grab a megaphone. That's the look this has. If you look closely, that is the look this has. A megaphone. There's the thing that the person holds, and then it goes something like that, something like that, something like that, something like that. It's a megaphone. It has the same exact look. So before we get into the measured move or where to enter or exit, we need to know that this is a bearish reversal pattern. Again, it's a bearish reversal pattern. So it comes from this up move, and if it's going to reverse on us, we should expect a down move. This is a bullish move. It's going to turn. This pattern signifies that a reversal is going to take place, and this is going to turn bearish. The stock should turn, the crypto should turn, and start going down at some point. Now, we need to find out how far we should expect the move. So how we're going to measure it is we're going to take this lowest point of trend support down here when this bouncing around started, and we're going to take the highest point of trend resistance up here. Those are the 2 points that we need to get. What we're going to do is measure the height between the two. We're not going to drag it from here to here. We're not going to do that. What we're going to do is find the lowest point over here and bring it straight up until we reach the level of the highest point of trend resistance up here. If it's easier for you, you can draw a line over here and draw a line over here. You can draw a price level and a price level, and then just connect the line between the two, whatever is easiest for you. But that is how you want to measure this move. Again, from the lowest point of trend support, bring it up to the highest point of trend resistance, and that's the move you should expect. Now, where should you expect that move is below this trend support over here. So once we get a candle to break and close below this trend support, and at this point, it is not forming a higher low. It failed to reach and form a higher high. If you look closely, over here was a higher high, higher high, higher high. If this broadening top didn't play out, this thing would have ripped up and kept forming another high. Maybe this thing would have came up here and formed a higher low as well. In this case, this failed to form a higher low. Look, it came to the same low. It came even a little bit lower. So this is going to be our entry for this pattern. Again, this is a bearish pattern, so we are entering a short trade. We are anticipating and making money on this stock or this crypto, whatever you are trading, going down. So it breaks this, it closes below this trend support we have over here. That is going to be our entry for a short trade. Once you get in, we know the measured move. We measured the move from down here up to up here. We're going to take that measured move and put it over here. So where it breaks is where the measured move should start. Maybe your entry is going to be over here. Now, your entry shouldn't be as soon as it breaks over here, because this thing can go like this and wick right back up, and it could close like a green candle like this. So the measured move is going to start from where it breaks, but you might not get in where it breaks. You might get in once the candle closes. You might get in once the next candle opens as confirmation. So we want to enter over here once this closes, once we know it's going to close. Once you get better at this time after time, maybe when you're watching multiple time frames, you would be able to indicate that this candle is going to close below it. For example, if this is a 5-minute candle that you're waiting to close below this trend support, maybe you're looking at the 3-minute chart, and one 3-minute already printed. You're waiting on the next 3-minute to print, and that what you got from the first 3-minute is that it's a rejection candle, meaning this next one should flush lower. So then maybe you would enter. So once you start to piece together the pieces, start to try a couple things, once you start to experiment a couple things and see what works for you, maybe you'd be able to know that this candle is going to close. Maybe you'll be able to be a little bit more aggressive and rush your entry a little bit. Or know that, okay, I'm rushing my entry, so I'm putting on a little bit more risk, so I need to be able to cut it maybe a little bit earlier. Or in this trade, I might have a little bit wider of risk parameters. It depends on how far you get and at that point, what you are willing to implement. So if you're implementing high risk, for example, then in that case, maybe some people might even enter on the break over here, even though it wouldn't be the wisest thing, because this thing can snap back and keep going up. We don't know that. But what I'm saying is, time after time, you would be able to sort of put more pieces to the puzzle together. You would sort of be able to make your own system and see what works for you. So we know the measured move starts from here. We are in over here, let's say. When this candle closes, we get in over there. We ride this whole wave down. Now, what are we going to do after we ride that whole wave down? Well, it had its whole measured move, so what should we expect more than that? We should exit the short trade, and at this point, evaluate what's going on. At this point, it had its measured move. It's back down over here. What is it going to do? Is it going to hold over here, and is it going to go up? Is it going to move sideways over here and then break lower and then retest and then go lower again? We don't know. But what we do know is this is our measured move. It had its measured move of the broadening top. Now at this point, when it's down here, maybe it forms, I don't know, maybe it starts going like this, and then it goes up to here, and then it goes like this, and then it forms a head, and then it forms a shoulder, and now a new pattern is formed, the head and shoulders. This, we're going to trade this separately than this, because this, we already had the entry, we already had the measured move. So what we're going to do is we're going to forget about this broadening top. We know it's a reversal pattern. It reversed. Cool. We are not going to attach this to whatever happens next, because its measured move already took place. So don't get stuck to the fact that, oh, okay, that's it. It's going to keep going down. No, this thing might not keep going down. This pattern itself played out. The reversal played out. It reversed already. Now this price is back to over here where it started. What's going to happen next? We don't know. Maybe it's going to hold and go up. Maybe it's going to continue lower. So always, anytime you're trading a pattern, keep in mind that, okay, this pattern, let's say it's a double bottom, for example. I know its measured move is from the neckline up to this bottom support over here. It had the measured move. Okay, cool. What are you going to do at that point? Why are you still in a long trade? It had its measured move. Unless, again, I'm going to keep saying this, unless you see a continuation to the upside. If you've been doing this for a while and you start to know, okay, this thing looks like it's going to keep going, that's a different story. But what I'm stressing on is don't stick with the mentality that, okay, this double bottom is here, this thing is going to keep going all day. Because if you're looking at a 5-minute chart, for example, and this double bottom is playing for a 5-minute chart, you shouldn't hold this for 3 days based on this double bottom over here. Because this double bottom, you're trading it off of a 5-minute chart. So this should be a trade that you're going to be in and out of within the time frame you are trading. And if you're looking at this broadening top, for example, within a 5-minute chart, then this thing played out. Okay, cool. At this point, there's your exit. You should maybe wait and see what happens next in order for you to know and indicate what you should do next. And take it trade by trade, basically. And that's that for now.